the more sophisticated it is, the more fragile it is. That's just how everything is, right? Because everything relies on machines, and if you fool one spot in the system, you push the whole thing over. That's exactly what we're living in. We think that the financial system is so protected and so massive. Well, that's specifically what makes it so weak.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 24th through March 31st, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1 10th ounce Platinum Britannia are just $29 over melt. And 1 10th ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor. Rafi, thank you so much for joining us today.
Hey Elijah, good to be back again.
Well, it's great to have you today. It's been too long. I did want to discuss the precious metal markets and also what's happening on the basis trade right now. You have just recently reported on that, so I'd like to get your perspective. But first, gold and silver, especially gold, your take on making new all-time highs, it looks like today, 30, 60 or so, really testing the limits here. What is your take on what's happening in gold and silver, popping above $34 again?
I don't think we're testing any limits. I mean, the limits, the actual limit would be the 1980 limit taken by the Daniel Oliver calculation of if you take the market price of gold and you multiply by the amount of gold that's supposedly represented by the Fed's gold certificates, how much of those, if you take the total dollar amount of that, what percentage of the Fed's other liabilities is back? And the peak in 1980 was 130%, that was too much. That's why gold fell after that. That's functionally a gold standard, meaning if you take everything on the Fed's balance sheet, including all the debt that it has, and then you take the gold part of the balance sheet and you make it balance out the debt, meaning if the debt disappears, you still have that same value in dollars in the gold or purchasing power in the gold, then that balances the balance sheet. That's what it's supposed to do. So I think we're still at like 7-8%. We're nowhere near the limit. I think the limit would be if we're going to have the 1980 numbers of 130%, which we had for one day. I don't expect that. That's not equilibrium. That's not going to be sustained. But 130% would be like $90,000 an ounce, which we could get if the Fed completely stops printing. And then a banking crisis ensues, right? And then we get to 130%. That could last for a day. We could hit 100% for maybe a month or two until a new derivative system crops up and then replaces the old debt with a new debt, some kind of haircut system or something like they did in Europe during the sovereign debt crisis. Something that could happen. But yeah, 3,060. It's nowhere near any kind of limit. What's causing it? This is always a fun game. You could always try to point to the proximal cause. Yeah, I think it's this, I think it's that. I think the mainstream media is saying that it's the tariff threats and Trump is threatening tariffs on this, tariffs on that, and breaking down international trade. The proximate cause doesn't really matter. I'm sure there's a more correct answer and a less correct answer, but the beauty of understanding that gold and silver are money is that it doesn't matter. And then once you know that the end game is that gold and silver will balance out the rest of the Fed's liabilities, meaning all the purchasing power will go into the debt. As the debt loses value, gold and silver will gain value. Gold will gain value because it's on the balance sheet, because that is the money. Silver will gain value if the gold derivatives no longer work, because if the gold derivatives no longer work, there's no other way to divide silver, to divide gold, and that's why silver will go up. So It's nice that gold's going to 3060 because I want this whole thing to end as soon as possible, just so society can move on. But the sign that we're really close is going to be the gold to silver ratio, which hasn't really moved down. By down, I mean silver moving up. I think we're still at like 88, 90 or something. I haven't checked it in a while, but it's nowhere near any kind of end game territory. But I do believe that when we start to move down to the 15-to-1 ratio or towards that area, it's going to be fast. In 1971, I think the total amount of time that silver was actually moving up in the 1979, 1980 era, and that was most of the move. I think it was a total of 4 months. Right? Excluding the parts of 1979 where the gold to silver ratio was stable, which was like 2 or 3 months in that year. So I think the whole thing was like 4 months. So we're going to see a move of about, from 90 to somewhere around 15-to-1. And when we start to see that move, it's going to be really fast. I don't know when it's going to start, but once it gets going, we're going to get there quick. There's not going to be time.
With regard to the COMEX, I know we've seen a lot of outflows of precious metals from there. And, previously in January, we had seen huge outflows, maybe because of fear of tariffs, as you mentioned, from London to COMEX. But we're seeing the outflows from COMEX as well. So your take on this?
I'm seeing the outflows from London to COMEX, or from wherever they're coming from to COMEX. It could be using London as an exchange. It could be physically from London. I think in the case of silver, it's physically from London to the COMEX, but it doesn't matter where it's coming from. The fact is that it's coming into New York, and I've been trying to find an answer as to why this is happening. I had on my channel Eric Young. I published a video yesterday, actually, and he's a COMEX expert. I talk about it sometimes, but that's not really my area of focus. My area of focus is like the plumbing of the central bank system and the depth, the deep dark depths of the monetary system led by the Fed. So what he said is that he thinks that there's an inflow into New York, meaning the mechanical question is, we understand why there's an inflow into New York, because for some reason gold and silver are more expensive in New York than they are in London or other places in the world. So what you would do is you would buy metal abroad and then ship it to New York and sell it there, and then you pocket the difference. There's always just money flows. It's like where do you get the most money from? And right now that's the trade. Now the question is why. So for some reason there's a premium being demanded for gold and silver in New York, and I don't know why. But Eric Young's opinion is that the U.S. government is buying gold. Now I'm not sure if I agree that might be true, but and I guess the reasoning is that the government is buying gold, and gold bugs we want to say because they see the end of the fiat era, and therefore they want to buy gold to try to back whatever a new dollar would be, and then do a debt reset. Maybe I don't know. I don't think so, but I could be wrong. But you see, either way, we go back to the first point. It doesn't matter if you own gold and silver. It's like it doesn't matter why this is happening either. Like because at the bottom line, the gold is the money. If you have that, you'll be fine, whatever the reason for it happening is. So if he's right, he could be right about the gold. Maybe the U.S. government is buying gold and trying to back the new dollar or restock Fort Knox or whatever we want to think. And I spoke to another guy, I think his name was Mayor Valinsky, who actually believes there is no gold at Fort Knox. So if you want to take those two theories together and say that the Trump administration or whoever understands money in the Trump administration, I don't think many of them do or any of them do, but I think they understand it better than the Biden administration, which doesn't understand anything. Could be right about the gold, but then why would the U.S. government be buying silver? It wouldn't be. Like they'd have no use for that. So then you could say maybe, okay, so somebody caught on to the U.S. government buying gold, and then so there's a premium on silver too in New York. Okay, fine, but then we're kind of getting convoluted here, and as to what's really going on, nobody really knows. But what Eric also said, King Kong 9888 on Twitter, is that the float on physical gold at the LBMA in London is 0, which is why there's like a 90-day waiting period. I haven't tried to buy physical gold from London. I don't have the money to do that. So I can't tell you from firsthand that's what's happening, but I hear that's what's happening. And with silver, the float is something like 5,500 metric tons left, and every day now, if you check the NYMEX page at the CME website, there's like between 1 and 4 million ounces of silver flooding into New York from London every day. So if you take 5,500 metric tons, you divide it by 5, this is the average of 1 to 4 million, let's say like 2.5 million ounces a day. That's something between 5 and 7 months until the LBMA is out of silver. What happens then? I guess we're going to find out. Because the more monetary stress that we're under, the more silver is going to flow into New York, just because that's the double-edged sword of being the world's reserve currency, that the real money is going to flow towards the reserve currency. I guess you could analogize that to something like an immune system reaction. When the body is under attack, like the main organs get most of the blood. So I think the monetary system is under attack now, not by any, I'm not saying by any like nefarious conspiracy of people, though that might be true, I don't know. But I think just the nature of how it's been abused is causing this reaction. And I think it's going to continue until gold and silver run out from other places. And then we'll see what happens from there.
Now, you mentioned the analogy of kind of the immune system being under attack. And so why is it, though, in practical terms, why is it that because the U.S. has the reserve currency, all the gold is going to be flowing here? Is it because the government wants to protect themselves, or what are the what's the reasoning here?
Well, okay. I don't have a perfect answer to this question, but I have like the start of what could be the logic. This is something I can't really have evidence for, but I can try to, from a positivist way, try to figure out why it should logically be true. And then the question is, do you want to trust me, or how biased am I, or what am I making up here in the steps? I don't know. But if I'm a foreign central bank and my assets are mainly dollars, right? Then and my currency is weakening, then I would, or let's say, if you're a foreign central bank and you're relying on the dollar system, then let's say you're in a currency crisis, and then in a banking crisis, then what you're going to do is you're going to try to weaken your currency to keep your banking system alive. So you'll buy more of your reserve, you'll buy more dollars. I remember the Bank of Israel doing that here. When the shekel was strengthening, they bought more dollars. I think it was because of the war, other things like that. So when you are the reserve currency and your currency is strengthening, right? To weaken it, what else can you do but buy your reserve? If you're the reserve currency, you can't have other currencies in reserve. I mean, you can technically, but they're not going to. That's folding back in itself. Like you have to go down a layer. So your reserve is going to be gold. So you could say that the central bank or its proxies or something, or some other bank that it's controlling, is buying gold in order to preserve its own banking system, because there's nowhere else to go in the pyramid. So that would be if the reserve currency is under attack, meaning its banking system is under attack, meaning the currency strengthens because there's a dollar shortage or some kind of financial crisis brewing that we don't quite see yet out in the open, but it's happening. Again, like remember, like before the 2008 crisis, gold was going up and up and up and up for like 6 years, right? It wasn't stopping. And before the 2020 crisis, it was also going up, and then it spiked at the end of the crisis. So we're seeing that now. So this means like this is the early innings of a financial crisis. When there's a financial crisis, the dollar goes up in value as huge demand in a liquidity crisis, liquidity crunch. And so the mechanical response is to acquire more of the reserve asset with the dollars by creating more dollars to buy that reserve asset. I would say directly, I'm not saying the Fed's printing money to buy gold, but I'm saying this is, it happens in more of an organic way that I can't really explain, but it's happening now because you're seeing the flows. I mean, we're not making these things up. So that's what I think's happening. I think we're at a strengthening banking crisis or financial crisis or some kind of crisis that involves the dollar strengthening, and that's why gold is flowing in.
Now, how does the basis trade play into all of this as we kind of see the end game approaching, right? And this is what you're reporting on. There are all these different factors going on at the same time, but you've recently reported on the basis trade. So if you could explain for our viewers what that is, and then also you're saying there's kind of a trial balloon going on right now in that area.
Yeah, I just noticed this today. So one of the tricks that I do in my research, I have no problem sharing this. There's one author on Bloomberg. Her name is Alex Harris. I think her full name is Alexandra. I'm pretty sure she's a woman. And she's like the plumbing correspondent. That's what I call her. So I check her author page every so often. It updates. So I see now that she's quoting a paper. I forgot what it was called by a guy named Anil Kashyap. I think it's an Indian name, so I thought that was a pretty appropriate name for a money printing guy. Like Neil Kashkari, they all have like the name Cash in the name, but you can say the name anything is Cash Patel. I don't know, maybe it's a popular Indian thing. So this guy is saying that the basis trade has to be bailed out. The basis trade is the trade where basically hedge funds, right? They sell futures in treasuries that are at a slight premium to actual treasuries, actual bonds that you hold the paper of those bonds, and so they sell the futures, they buy the treasuries, and then they profit off the spread, and they deliver the treasuries into the future, and they get like a few cents for each trade that they make, and then they multiply. How do they multiply it? By borrowing reserves, by borrowing the extra bank reserves, doing this over and over and over again. So the whole thing is worth about $1 trillion notionally. Now in 2019, when it crashed last time, which we called the Repocalypse in September 2019, it was worth $500 billion. And in response to that crash in the basis trade in September 2019, the Fed started expanding its balance sheet and then amped it up hugely to about $1.6 trillion by April, May 2020. And so now he says that the entire basis trade is about $1 trillion. Now, and here's the nuance that, okay, so you could say, $1 trillion, okay. There are other markets that are bigger than $1 trillion. You could say, let's say the commercial real estate market has a notional value of a lot more than $1 trillion, or residential real estate, mortgage-backed securities have a notional value of a lot more than $1 trillion. So like, well, what's the big deal about $1 trillion? And I sort of mean that facetiously, but I sort of don't. So the difference is with the basis trade, it's not necessarily the size of it, right? If we're talking about an inverted pyramid, right, the stuff at the bottom of the pyramid is going to have a notionally smaller number, but it's going to support everything else. So the basis trade, it's not exactly using dollars. It's using dollars, yeah, but the dollar is called reserves, which another name for reserves is high-powered money. This is the stuff that gets lent out, and this is the stuff that's fractionally loaned over and over and over again. Thing is, they can't do it now because all this stuff is dead debt from 2008 that they keep rolling over into more reserves because it could never have been loaned out because the structure of the economy can't handle all that cash. So now it's just used for basis trades. So then the question is, why is a $1 trillion market, which seems notionally small compared to other humongous markets that are built on top of it, why is this such a critical one? Because it's at the base. It's right above cash dollars. You have gold, you have cash dollars, and you have the repo market, and then from there that's the high power money that supports everything on top of it. So if this $1 trillion goes, everything on top of it falls, which is why everything was falling during the Repocalypse, which is why everything's going to fall now, which is why you have trial balloons from Bloomberg and this guy called Kashyap, who's saying we need to bail this thing out. And if they bail it out, last time was 1.6 trillion to bail out a $500 billion market. So I guess multiply it by 2, you got 3.2 trillion, whatever that leads to. It's going to be a lot of money, and they're going to have to bail it out. And it's going to be fun for some people when it happens, and it's going to be miserable for others.
So it seems like this, again, is just another reason for the Fed to print, right? So it's just kind of a step closer to that end game of, devaluation of the US dollar.
Yeah. The printing in the mainstream financial media, I don't even know if we want to call it mainstream. I think we're the mainstream now. Channels like yours and mine, like we're really the mainstream. Nobody really pays attention to the doctorate media anymore, other than just to see what they're saying. But nobody takes them seriously. They're all a bunch of clowns. They try to make it sound sophisticated, like, oh, if the Fed prints here, they use different words and they use different academic jargon for it. Really, what they're talking about is printing dollars at different layers of the pyramid. You print here, they call it one thing. You print at level 3, they call it another thing. You print at level 4, they call it a different thing. And they and they have all these different acronyms for it. It's all just injecting different liquidity things at different layers of the pyramid to try to like even out a humongous pile of garbage that doesn't fall over and, you know, wreck everybody. But that's what's going to happen.
Now, moving forward here, then during this time, I mean, it seems like things are relatively calm right now. I mean, obviously there's so many things happening in the world, but even with this relative calm, we're seeing huge outflows from London, huge outflows from the COMEX, and all-time high prices in gold. So what is this going to look like if things really start to ramp up in the financial arena?
What is it going to start to look like? It's going to start to look like 2008, except if you remember 2008, and I was still a young kid back then, I'm sure you were too. My financial consciousness was only just starting there, and that's kind of why I came into this whole arena, because I wanted to figure out what was going on. But I do recall that in 2008, the financial, call them bigwigs, fat cats, whatever, whoever's in charge of the financial system, the guys you see on CNBC, the people, you know, on the Fed, the people, the big bank CEOs, they all seem to be panicking, like you know, blood draining from their faces and like really showing kind of some kind of nausea on the air. But you know, they were clawing for bailouts because they knew that would save them, and it did for a while, for a time. I think this time it's going to be like 2008, except bailouts are just going to make things worse. When we see another huge crash like 2008 in the guts of the financial system, and the Fed says, "Oh, don't worry, we're going to print $10 trillion." This time, the people at the top are not going to breathe a sigh of relief. They're going to panic even more, and then gold and silver are going to go up and up and up and up, and then they're going to realize that there's nothing that they can do except buy gold and silver and save themselves, because even if the big huge conglomerates, the huge banking system buddies, the huge corporations, even if they buy gold and silver, they're not going to save their huge international, multinational corporate structure entity thing, because that relies on everybody else having money too, right? They can save themselves maybe and, like, you know, move to an island or something, or save some pieces of capital, but it's not, no matter how much gold and silver they stack, they're not going to be able to save their business model, because everyone is going to be going for the same thing.
That's a really interesting point, and it points out how interconnected the system is. And it is concerning then when we see cracks developing here and there, that just one little thing seems to have the potential to take down the entire system.
Yeah, I mean, look, that's how it is with everything, not just the financial system. When a system clearly isn't working, and I saw this myself in real life. You know, not just in like a theoretical financial system with digital data there that's changing, but you know, I live in Israel, and in October 6th, 2023, we had this illusion that we had this army that was, you know, protecting us from invasion, and a huge border of all this technology with sensors and who even knows? Like it was dramatized as the most technological defense border in the world. And look, you know, a few thousand people came and rampaged and murdered thousands of people, you know, with almost no response in like 12 hours. So, you know, a tiny little thing can push over a seemingly sophisticated. The more sophisticated it is, the more fragile it is. That's just how everything is, right? Because everything relies on machines, and they, you know, if you fool one spot in the system, you push the whole thing over. That's exactly what we're living in. We think that the financial system is so protected and so massive. Well, that's specifically what makes it so weak.
Certainly. And if our viewers are interested in really learning more, they can go to your YouTube channel, The Endgame Investor. But this really, what you talk a lot about is kind of protecting yourself. So can you maybe share with our viewers again your view on that? What are the best ways to prepare for this coming crisis?
So I'll quickly repeat what I usually say at the end, and then I'll change angles a little bit. But obviously, you want to have physical gold and silver. You want to have some physically with you that you can hold on to and use in a pinch. I wouldn't hold all of it at home because there is a risk to that. So keep it with a company that you trust, that you know is philosophically with you. I use monetary metals. Maybe you do too. You can buy some from Miles Franklin, who you affiliate with. I highly recommend that also. And maybe gold stocks you could also own, though those are also risky. So you want to kind of mix it up. And junk silver is definitely very important. And maybe even more important than that, after you have a minimal amount of gold and silver, is you need to be around people who don't have to understand the monetary system, but they have to have a basic sense for what reality is, right? They have to have a sense that gold and silver are kind of a good idea to have, and that people with basic morals, people you can talk to that aren't completely nuts. And that will ground you mentally, and it will keep you from panicking when things are really falling apart. To have a community of people that have resources and talent, and they can farm, and they can grow food, and they're armed, and they can protect from roving bands of whoever's going to come, get out of the big cities. And then I would say to get through it, when we hit a 15-to-1 ratio, when the gold to silver ratio hits that number, that's the bell. It's not going to get any worse than that. When we hit that ratio, it's going to be peak chaos. So your responsibility at that time is to go out and buy anything that you can, because by buying stuff, you are circulating gold and silver throughout the economy, and that is what will stabilize things. People need money to survive. If the dollar is not money, they need money. They need something that is stable. So they're going to need gold and silver. That's why they're offering all their stuff to you at a 15-to-1 ratio at very, very low prices, because money is the most basic good that is in most desperate need. Because it's not like we run out of water. It's not like we run out of food. It's not like we run out of housing. It's that we have no monetary medium with which to distribute this stuff anymore. And that causes the crisis. So the more we get gold and silver out into the open at that 15-to-1 ratio or somewhere around it, the quicker we can get out of this crisis. So that's what you got to do.
Fantastic. And again, the End of Game Investor on YouTube, Substack. Thank you so much, Rafi. Any last thoughts before I let you go?
Yeah, stay calm, stay happy, and stay excited. And try not to let, I've been seeing a lot of personal tragedy around me in my neighborhood, financial tragedy, and just people not dealing with reality, and close friends, and just I'm speaking to myself and letting you listen, as one of my rabbis used to say when he would kind of hammer moral message into. You'd say, I'm speaking to myself, letting you listen. Don't let these things get to your head. There's going to be a lot of tragedy. You just got to take it and smile and say, this is it, and I'll do what I can to help, but don't overburden yourself.
Fantastic. Rafi, stay safe there. God bless, and you have a fantastic day.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for March 24th through March 31st, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. And 1 10th-ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.